Welcome. I'm Tracy Marshall, new Division Director of Colorado's Family and Medical Leave Insurance Program. I'm pleased to welcome you to the first employer-focused family presentation of 2022. This is the first in a series of presentations in which we'll cover topics of employer interest regarding Colorado's paid family leave program. We're experimenting with this presentation format, and we look forward to your feedback on how this works for you. Once a quarter, we plan to hold a live event where you can share your questions on the program and give feedback on the presentation series. We recognize that Colorado's paid leave program is a brand new requirement, and you will have a lot of concerns moving forward. We look forward to ongoing and open communication with the employer community on these topics. We know you have a lot going on, so we appreciate your interest in this presentation. Here is our current list of upcoming topics for presentation. In February, we'll have another pre-recorded presentation released on the last day of the month. This talk will focus on the differences between already existing leave laws, both federal and state, and what will be covered in the new family program. In March, we'll preview our employer toolkit, which will help you prepare to implement family in your business. Moving forward, we'll have targeted presentations for different populations of employers whose family program obligations may be different from the general employer population. This includes both small businesses and local governments. Here is our agenda for today's talk. We'll cover basics of the family program, including how it came about and what it means for employers and employees. We'll cover key timelines you'll need to consider for implementing family into your business plans. We'll talk about the rulemaking we have conducted so far for the program, what is upcoming, and how you can add your voice to the rulemaking process moving forward. We'll discuss the topic of private plans, which cover employers who already have a paid leave program in place that can substitute for implementing the state family program. We'll address some frequently asked questions we're receiving about the program from your fellow employers. And finally, we will leave you with ideas on what you can do now to start preparing your business for family. This slide contains the key dates for implementing our family program. We'll begin paying benefits on January 1st, 2024. CDLE will conduct public rulemaking in order to determine how we implement the family program. These rulemaking decisions will directly impact you as employers, and we encourage you to participate in that process. You can attend the public hearing for each rule set, or you can send us comments on the proposed rules. We will send out information about hearings to our stakeholder list, and you may register to participate in those hearings from our website. We'll list our contact information at the end of this presentation if you have additional questions about how to get involved. So far, we have finalized rules around premiums and local governments. The premiums rules cover how we will assess and collect premiums, how we will address self-employed persons, how employers will deduct premiums from employees, premium exemptions, and how we will communicate with you about your premium liabilities. The local government's rules cover how local government employers will participate in the family program and how to formally decline participation. The text of all these rules are available on the family website. In the spring of this year, we anticipate addressing the rules for benefits and for private plans. We will post drafts of these proposed rules along with any changes made during the public comment period on our website. In December, we held a live webinar about the family program, and we received a lot of questions from our employer participants. Here we have highlighted some of the prominent topics and questions, and we'll quickly review some answers. Here are the most popular questions around administration of the program. When does this go into effect? Premium payments go live on January 1st, 2023, and benefits can be applied for on January 1st, 2024. Is this optional for the employee or employer? This is required for most Colorado employees and employers, with the few notable exceptions of self-employed individuals, local government employers, and their employees if their workplace opts out of coverage, and also federal employees. Everyone else, including domestic workers, clergy, nonprofit organizations, will be required to comply with the premium payments and could be eligible to apply for benefits. How does this law interact with FMLA, HIFWA, paid sick leave? FAMLI will run concurrently with the federal FMLA. Paid sick days like those created by the Healthy Family Workplace Act, HIFWA, are best for colds and sick days people have from time to time. Family leave is meant for life-changing events and serious illness. Workers may choose to use HIFWA before or upon returning to the office from leave. Can this leave be taken intermittently? Yes, it can. This can be used for intermittent time off. Does the employee apply directly to the government? Similar to unemployment insurance, an employee will apply to the FAMLI program for benefits. The program will determine eligibility based on submitted documentation and then issue payment directly to the employee. Are premium and benefits payments taxable? Wages will remain taxable in Colorado. The premiums and benefit payments are exempt from state taxes. The federal IRS has yet to issue guidance regarding federal tax treatment of premiums and benefits from state PFML programs. We anticipate the division will be able to issue 1099 tax forms. Does this cover seasonal employers? Yes. Once an employee has made $2,500 in wages, they may become eligible for the FAMLI benefit. Here are some of the most popular questions around employee benefits of this program. Will we be notified when an employee applies for this? Yes, employers will be notified when an employee applies for leave and will have an opportunity to provide the division with information. The division will also have other fraud measures in place. Can you go over in more detail what the employee benefit is for the employee? How does the sliding percentage work? The benefit amount is proportional to the percentage of the state's average weekly wage earned by the employee. People earning less money will qualify for a higher amount of wage replacement. For more information, see CRS 8-13.3-506. The benefit amount estimate is also currently available by accessing the calculator found on the FAMLI website. How much leave can an employee take? FAMLI leave is different from paid sick days and will require documentation of need before the benefit is approved by the FAMLI division. Depending on the reason and need for leave, the benefit leave period may be up to 12 weeks. For people experiencing pregnancy and childbirth complications, this may be extended an additional 4 weeks for a total of 16 weeks. The FAMLI benefit can only be taken once a year across a rolling annual calendar year. For an example, if an employee takes paternity leave on February 11th, 2024 for the full 12 weeks, they would not be eligible for any other FAMLI leave period until February 11th, 2025. If there is no more money in the individual's fund, does it stop paying out? No. The benefit amount is paid from the family fund as a social insurance pool. The money is not solely reserved for an individual like a health savings account or other specific savings account would operate. Here are some of the most popular questions around premiums of the program. How will these funds be collected? Do we need to set up an online account? Employers will need to submit to the Colorado Department of Labor and Employment both their share, if required, and their employees' share of the premium through an online system at the end of each quarter. These quarterly filings should be similar to how most companies submit their unemployment insurance today. There will be a need to register, and we'll begin supporting setting these up in the fourth quarter of this year. We are headquartered outside of Colorado. Does this impact us? Yes. Similar to the mechanism under unemployment insurance, where an employee is localized to the state of Colorado and their out-of-state employer would pay into Colorado's unemployment insurance, the FAMLI program follows the same model. The best practice has also been adopted by other states with paid family and medical leave programs. What about a remote employee working in Colorado? Yes. If the work is performed in Colorado and the company pays Colorado unemployment insurance tax and reports wages to Colorado for that employee, they would also be eligible for FAMLI. You can see our website for more information there. What size employers does this apply to? All Colorado businesses of 2 and more employees will be impacted by FAMLI. Businesses with 10 or more employees will be required to pay a quarterly premium equal to 0.9% of each employee's wage into the FAMLI fund beginning January 1st, 2023, with the first payment due 1st of April, 2023. The employer may choose to split the premium cost 50-50 with the employee and is permitted to deduct half of the premium cost, so 0.45%, from the employee's wages, but they must submit the full amount, 0.9%, to the division. What about the self-employed? Sole proprietors may choose to opt into the program, but they are not required by law to do so. What about 1099 employees? Most Colorado employees become eligible to take paid leave after they have earned at least $2,500 in wages within the state within the last 4 calendar quarters. Self-employed workers, both 1099 or contract workers, may be eligible if they have opted into coverage and live and work in Colorado. And lastly, a few more questions from employers on premiums. Who is exempt from this program? Only local government employees and self-employed individuals have the option to opt out of the program. The following circumstances may exempt employees from paying the employee portion of the FAMLI deduction. Employees of the federal government cannot access the state benefit and therefore will not see any FAMLI-related wage deductions on their pay stubs. If an individual works for an employer who has chosen to cover their employee's full portion of the contribution as an added work perk, the employee will not see any FAMLI-related wage deductions. Employers may apply to opt out of the program only if they already have a privately funded paid family leave program in place that offers benefits comparable to FAMLI. Employees for those employers also won't see any state-related FAMLI wage deductions, but may see other deductions depending on how the employer funds its private program. Does this apply to all types of wages, including bonuses? Yes, there are a few exemptions. you can see 7 CCR 1107-1, 1.5.4. Bonuses are normally seen and counted as wages in Colorado. The family rules were carefully crafted so as not to redefine the definition of wages for Colorado employers and employees. Will this be a separate filing or filed with unemployment taxes? This will be a separate filing. However, as we are working to design and build the technology platform, this will streamline a process as much as possible so that when an employer logs in to pay one premium, they can also pay the other to save time and effort. All of these FAQs and many more can be found on the FAMLI website. Now I would like to touch briefly on private plans. As mentioned earlier, as of the date of this recording, we are in the process of drafting rules around private plans, with the goal of publishing these rules in spring 2022. We encourage all employers to provide comment either in writing or via a public comment hearing at a date to be shared in the future. In order to qualify for an exemption from paid leave benefits through the FAMLI division, employers must offer a plan to all employees that provide all of the same rights, protections, and benefits as Colorado's Family Paid Leave program. In order to be approved, a private plan must offer at least the same number of weeks of benefits, offer at least the same level of wage replacement for each week of benefits. It must include no additional requirements or conditions. Employers must deduct the same amount from employee paychecks as the state plan. They must cover all employees through the duration of their employment and remain compliant with any additional requirements established by the FAMLI division. Several insurance companies who already provide private plans in other states have already expressed interest, and we do anticipate having rules for private plans adopted this spring, which would give employers and insurers nearly a year to shop for services before the first premium payment is due at the end of the first fiscal quarter. Self-insurance will be a longer application process, as the division will need to vet the financial standing of the company and will require a surety bond. Here are 6 steps to consider when preparing your business for Colorado's paid family leave program. Determine how FAMLI will apply to your business. Estimate your premium liability. Consider your options. While markets for private plans are not yet available, and details on self-insured options with the use of a surety bond to pay the state are still forthcoming, you may want to plan for conversations with your insurance brokers and financial planners. Talk to your HR. If you use a payroll company or if you process payroll yourself, you will need a plan to both have the family premiums deducted and submitted to CDLE beginning January 1st of 2023. Ask questions. We are committed to helping you navigate the new program and to ensuring your success. On this slide, you can see how you can begin to prepare your business over the coming year to implement the FAMLI program. That concludes today's presentation. If you have any questions, we encourage you to reach out to us at the email address listed above, cdle_family_info@state.co.us, and also visit our website for the latest information. As a reminder, our next presentation will be released on February 28th, and we will discuss the difference between FAMLI and other employer leave laws. Thank you so much for your time today.